and welcome. You're watching NewsX with me, Devika Chopra. US President Donald Trump has slapped 25% tariffs on goods from Mexico and Canada, sending financial markets reeling. Trump's comments have sent US stock markets down sharply in late afternoon readings. The Mexican peso and the Canadian dollar have both fallen following President Trump's remarks. He has said that there is no room left for a deal that would avert the tariffs by curbing fentanyl flows into the US. Trump also said reciprocal tariffs would take effect on the 2nd of April on countries that impose duties on US products. He also reaffirmed that he will be increasing tariffs on all Chinese imports to 20% from the previous 10% levied to punish Beijing for continued shipments of fentanyl into the United States of America. China has announced that it will be imposing new retaliatory 10 to 15% tariffs on a range of agricultural imports from the US effective next week. Canadian Prime Minister Justin Trudeau has announced that they would also be imposing retaliatory tariffs against the US. Canada will be slapping 25% tariffs on 30 billion Canadian dollars worth of US goods. Meanwhile, India's benchmark indices have opened lower as global markets reacted negatively to the tariff war. The Nifty 50 index opened at 22,011, marking a decline of 108.25 points, while the BSE Sensex started the session at 72,817.34, down by 268.6 points, marking about a 16% down from record highs that were hit in September amid growth concerns. All 13 major sectors have logged losses at the opening, while the broader small and mid caps have fallen about 1% each. The MSCI Asia ex-Japan, meanwhile, dropped about 0.6%, tracking an overnight decline in Wall Street equities. Wall Street itself reacted negatively to Trump's tariffs, with Dow Jones dropping 1.5% and the S&P 500 down by 1.7%, while Nasdaq saw a fall of 2.6%. With me on the broadcast, Dr. Ajay Dua, former Commerce Secretary, Dr. Jayajit Bhattacharya, President of CDERP, Dr. Sharat Kohli, Senior Economist, and Mitali Nikore, Economist, with us as well. Let me quickly, before I go to our guests, if we can take our screens there on the news channel as well, so that we can take our viewers through what some of the key global indices have now closed at. Remember, viewers, I was earlier talking about Nifty 50. So the closing has been at 22,082.65, down by 36.65 and a percentage of 0.17. BSE has closed at 17,989.93, down by 0.13%. Dow Jones Industrial Average stands at 43,191, down by 1.48%, which is roughly 649.67 points, and S&P 500 index stands at 5,849 points, down by 1.76%, and that's a downfall of 104.78 points is what we're currently looking at. Let me now quickly open up this conversation. Dr. Ajay Dua, Donald Trump making good on his promise of slapping several nations with tariffs. It was expected that the markets would react to these announcements. However, what is your reading of what has happened globally as far as the stock market is concerned?
I'm not surprised, Devika, on what's happened today with the world's largest economy now taking positions of becoming increasingly protectionist, manifesting in levying of duties upon China and several other countries, some effected from today, some likely to happen very soon. This kind of a response in the emerging markets in particular, as well as in the countries directly affected was bound to happen. I'm not surprised, but the question is, this is not the end of it. I think he's just started playing this card of using trade as a means of effecting or achieving the goals which he has set out, some of which are, if I might use the word, absolutely untenable in terms of the geopolitical ambitions, in terms of kind of the role which it is seeking to play in the international, in the global arena. It is, I hope, that some of those things do get checked, and that these are postures and not quite the way or showing the way he might react in the future. If it does, then you would probably continue to see not merely the protectionist measure of protecting the American industry or the economic activity, which is what levy of these duties imposed today is meant for, but even otherwise it will lead to, one would say, a hell of a lot of instability in the countries of the world. That would be, I would say, yet another kind of cause for the stock markets to again start reeling the way it has happened, partly because of the US and partly because of other factors which we have seen in India with 16 to 18%. That's been the range of the way the stock market has come down. Those would worsen.
Okay, Jayajit, I want to understand your reading of the situation as well. At the same time, Donald Trump, usually what he says is what he does. He made this promise long ago that yes, I will be imposing tariffs, and now he believes that there's no other way than to go ahead with the imposition of tariffs on certain countries. He's begun with Canada, Mexico and China. India is also on his list as well. That is, of course, for people higher up to figure out how they're going to make those negotiations happen with the United States of America. But at the same time, given that this is probably not a decision that Trump will backtrack on soon, because some of the other nations also want to now impose some retaliatory tariffs, what is your reading of what this particular year could hold, and what will it take for the situation to somewhere stabilize? Perhaps this is the way ahead with the United States of America, because ultimately, what is Trump's logic, right? He says that I have to do this to protect my own country. We've been far too kind for far too long with nations across the world, but now it's time to play a fair game. So if this is what it is going ahead, when do you see the situation really stabilizing, and how worse do you think it will get?
Yeah, Devika, unfortunately, what you started by saying is true, that whatever Trump is saying, he's doing. So he had given a month's moratorium to Mexico and Canada and China for them to fall in line with what his demands were. In case of China, it's basically stopping the export of fentanyl to US. I don't know how much true it is, where there's a claim that China is still exporting fentanyl to US, or is that being used as an excuse? But the fact of the matter is, after a month's moratorium, he has gone ahead and put in these tariffs, which sends out a signal to the rest of the world and the stock markets that everything he has said about the rest of the world in terms of tariffs are going to come true, which includes India, unless his demands are met. Now, I'm not entirely privy to what his demands are, because that's not in public. I do know that the Indian government is working overtime to make sure that there is a soft landing in the trade relations between US and India. Frankly speaking, there isn't much of a threat from US exports to India, because the manufactured products of US are not really competitive. And India is far more competitive in those manufactured products. If you notice, in the automobile market, there is hardly any US companies. In fact, a few years ago, there were no automobile companies in in India of American origin, including two-wheelers. The Harley Davidson had also exited. And that just shows that they're not able to compete. And this was on a level playing field because the Koreans and the Japanese and the Chinese are also there in the Indian market. So, in terms of trade threat, it will probably be from largely agriculture that we are really concerned about, because India needs to dig its heels on agriculture like every other country does. We need to protect our farmers for food security, and therefore that will be possibly be one of the points of contention. The second will be the mobility of workers, essentially IT workers, and therefore the whole conversation around H-1B visa, and that will still be a sticking point between US and India. The other issue is that when the US is demanding that tariffs be reduced from India, unfortunately, India can't reduce the tariff only for US products. So if US is demanding for, let's say, tariffs on cars to be brought down to less than 25%, then India will get flooded by Chinese cars, which are backed by tremendous amount of subsidies that the Chinese government has given. So it'll wipe out the Indian industry without really giving much of a foothold to the US products, and which is exactly what happened with Harley Davidson, which was the Mango versus the Harley Davidson agreement, where they said we'll allow mangoes to be imported from India. In exchange, you need to let Harley Davidson operate in India. And we continue to export our mangoes, but there is not too many Harley Davidsons coming in. And that's the problem with manufactured goods coming from US. In terms of digital goods and digital products like the Google and the Amazon and so on and so forth, those are anyways having a free access to the Indian market, and they're minting money in the Indian market. So those are not really sticking out points. Yes, there are small issues around it in terms of the DPDP Act that India has formulated, and a few other sticking points in terms of India asking for answerability from these digital tech giants from US for internal security and safety purposes. But those can be papered out and ironed out. It's not really impacting the overall trade between India and US. So coming to your second part of the question, that when will all of this settle down, at least for India, if not the rest of the world, it really shouldn't take too much time in my crystal ball gazing, that US and India trade relations should settle down quickly. But still, the stock market will factor in the fact that the rest of the world is getting disrupted, which is going to impact India also. Because if others are not able to manufacture and sell to US and the other way around, in the supply chain, India plays a critical role in terms of components, in terms of fiber being provided, in terms of intermediate products, and therefore will still get impacted. Now, when will the rest of the world settle down? I think that's a multi-billion-dollar question. I really can't crystal ball on that.
Absolutely. Sharad, bringing you into the conversation, I want to understand from your perspective as well. Firstly, your reading of the entire situation, and also, is there anything that India can do at this point in time to protect itself and to protect its own markets?
Well, good evening, Devika. Good evening to my fellow panelists and NewsX viewers. I think there's little India can do. Prime Minister Modi went there. He spoke to President Trump, but I think he was very upfront that from 2nd of April, it's going to be tit for tat. You know, whatever you levy, we levy. I think President Trump and the Trump administration has to understand that globally, when trade is carried out, that's not really the way, because every country's economic texture is different. Every country's domestic requirements are different. Every country's structure, overall social structure is different. The business structure is different. The population density, population count is different. Per capita is different. I mean, America and India, you cannot. They may be one of maybe the oldest democracy, one may be the largest democracy. I guess that's the only thing which is common. There is nothing else which is common between India and America. I'm talking from the Indian perspective. So I think one point which I feel Trump administration is missing here is that these additional tariffs being levied from today on Mexico and Canada, which have been confirmed, 4th of March was the date they've been confirmed, and on China. And then from 2nd April, the big news is yet to come. That is 2nd April reciprocal tariffs across the world, which includes India as well. I think that'll cause a bigger reaction. But the point I think Trump administration will have to consider, maybe it's missing, maybe it's not considered, is that it will cause a very, very significant amount of inflation because America, so that I know, I have studied the American manufacturing market in detail. It does not manufacture most of this stuff. So what President Trump wants a fair level playing field, that is fine. I mean, America first or make America great again. But what you need to see is America prepared for the manufacturing onslaught? I mean, look at the cost of production in America. The cost of production, I was comparing the cost of production of stuff which is coming from Mexico and Canada and from China and India on an average. The cost is 4x, 5x as if they're produced in America. So how will America cope once these tariffs, once the goods land there? Inflation, America has been fighting inflation ever since COVID, and especially after the Russia-Ukraine war started more than 3 years ago now. It struggled with inflation. The Fed rates went up. The stock markets were impacted. Money became costlier in America. The growth of American subcontinent was impacted. America is not growing more than 2.5%. On record, it says 3%. But the real growth is 2.5%. Main reason has been a very high cost of money in America at this point of time. So I think that is a very important factor. To answer your question, which you asked, Jayjeet as well, allow me to, pick up the threads from what they said and add to that. I think President Trump is going to realize and stabilize the things when he realizes, because the impact of these tariffs, Devika, let's not forget, if something starts from today and the goods start landing from tomorrow, when by the time they reach people and the whole supply chain gets activated, it's going to take a few weeks. So in a few weeks' time, to my analysis, in about 6 to 8 weeks, the inflationary impact of these additional tariffs is going to be felt in the American economy. And the moment the inflation starts shooting on the goods, especially the essential goods, which people use on a day-to-day basis, you should not forget the 33, 35 crore population of America. When it sinks into the economy, I think that is the time when President Trump is going to realize that probably a corrective action. We've seen, a lot of decisions getting changed. We've seen it coming around, on so many things. Sometimes he makes a declaration, then he takes back. I remember the case of, people being fired from the Pentagon, some of the senior generals being fired, and then they realized, no, these were the guys who were in charge of the nuclear stuff, and they were taken back. A lot of decisions have been stayed by the courts in the US as well. So there have been controversies around the thing, but this is an economic impact, which is going to be, and the heat is going to be felt by the Aam Aadmi or people of America. I think that is when things will start stabilizing, because he will realize. And as far as India is concerned, Devika, I'm very, very clear that with whatever is happening in China, President Trump cannot ignore and cannot treat India the same way, because America does need a strong foothold, a strong economic alliance with Southeast Asia. That's where India comes in. And, with Indian bond is stronger than the Chinese bond. So I'm sure President Trump will realize it sooner than later. Although Prime Minister Modi tried his level best, I remember a private conversation coming out in the media that Prime Minister Modi said, no, I'm going to levy 10. He said, no. Then he said, no, I'm going to levy for the whole world. So you are no exception. But there have to be exceptions. There's a saying in English, exception proves the rule. I'm sure, because India is the next big supply chain powerhouse. So no country, especially America or the size of America, can ignore India as a supply chain powerhouse. India is the food basket, the agricultural products, the defense machinery, textiles, pharmaceuticals. I mean, the list is endless, which America cannot afford to make sure that it is landing expensive to the people. So for me, if you ask me, when is this going to stabilize? I feel in about a couple of months, you will find things settling down, and there might be a reversal on some of the items. In the meanwhile, our own Ministry of Commerce and Trade in India is sitting with a detailed list of items, studying item by item on what we can adjust, where America doesn't have to increase the tariffs, because he says we need a level playing field. If you're doing 10%, we'll do 10%. You do 5%, we do 5%. So there's a long list being analyzed there, that where we can strike a balance between protecting our own domestic industry here, and also making sure that the exports from India, which is around $800 billion, including services and merchandise, we're basically looking at merchandise, they do not get impacted overall. But yeah. I have no doubt, Devika, that America is going to realize sooner than later in the next couple of months.
Okay, I want to bring in Mithali Nikore into the conversation as well. Mithali Nikore, your reading of what's happening and what could be next as far as the tariff wars are concerned, because the tariff wars are really here to stay. Donald Trump is not going to back down, and other nations have also said that they will be imposing retaliatory tariffs. We've already seen on the very first day a huge impact on the markets worldwide. So how do you think that the situation really will unfold, and what would perhaps be your advice to investors at this point in time?
Thanks a lot, Devika, for getting me into the show. And I fully agree with Sharad ji and of course my previous co-panelists that at the end of the day, there are 2 or 3 major macro trends that we need to watch out for. The first macro trend to watch out for is really to understand where is it that the US economy is headed because of these tariffs that they are imposing. It's not anyone else from any other part of the country or the world which is suffer in all circumstances. So at the end of the day, even for President Trump to go ahead and keep on imposing newer and newer tariffs, it's an impossibility. And the second thing is
Okay,
that,
okay, Mitali, I'm going to pause you right there. We seem to be having some trouble with your connection and we keep losing your audio. So we will try to get in a word from Mitali. But I want to just take one last question with all of our analysts right now as well. I want to ask, beginning with Dr. Ajay Dua. Dr. Ajay Dua, usually in such circumstances, of course, there is a lot of panic amongst investors as well. As we've all concluded that there will be some impact going forward on the markets, it's possible that the markets will continue to witness a drop. But how would you expect the general public and investors to really react at this point in time? Should one just stay put, not panic, and what really is the way of not panicking?
Devika, that's actually you're asking me questions on the strategy going forward for the investors, for the government, and the whole set of people involved in India. I think panicking will be the worst possible reaction. That's the kind of a thing which President Trump and his administration expects. We have to be very clear that our exports to the United States are not very substantial. In the scheme of things, if you look at with our export bill of only $400 odd billion, we have divided our basket of exports, and the goods which President Trump's levy across the board, which he does, would be on the goods which are going to be affecting the United States industry. Steel, aluminum, he's already talked of. Yes, those to some extent, but we are not a major exporter of steel to the United States. We are not a major exporter of aluminum products, and that he's tried out in his first administration as well. We are a major exporter of services. He has not yet talked of how to be dealing with the services, and I think on that he's going to be very circumspect, because he can't do without a lot of the services which we export to the United States, because they are in the critical IT, digitization, and all kinds of high-tech industry. Our exports of generic pharmaceuticals, I think America would be harming itself much more than harming us if it levies duties on the generics which we export to the US, because as the reports are coming out, the Americans are hugely relying in their healthcare system on the generics now which come from India. We are not a major exporter of branded goods to the US. So he has to worry that if he's going to be making things costly for the United States, there could be a reaction very clearly from within, and he cannot afford to underplay that. While he might be wanting to help out the Republicans and the rich businessmen of the United States, that's one scheme of thing. but he cannot afford to be annoying and upsetting the apple cart for the majority of Americans who are dependent upon things like the Indian textiles, the apparels, upon the Indian pharma, and the services which India provides there. So I am not too worried that, all right, we will face it. There would be some impact, but that's an impact, global one. But scheme of things, we are a largely domestic-driven economy. Our investors look for a larger Indian domestic market than, except for a handful, a share of the global market to build up whether they should be investing more or not.
Okay, all right. I believe Mitali's connection is stabilized. Mitali, I have 1 last minute left. I'll leave the last word with you.
Three things I would say. Number one, we don't have to take every threat that President Trump makes, in its face. We have to see the long-term picture, and India has been a long-term ally of the US. Even President Modi's trip this time has made it very clear that there's a clear intent amongst both the countries to take trade forward, to take it to the $500 billion mark. So I think from a long-term picture, we are, on track. On the other hand, when it comes to specific products and specific tariffs, definitely these will be irritants and they have to be, looked at a product by product basis. But our larger relationship, whether it's defense, whether it's technology, whether it's services, this is a long-term relationship, and this, I believe, is going to continue. So at this point in time, markets, definitely my third point, markets are in a flurry, markets are, in a sell-off stage, but over time, this will stabilize, and in about 2 to 3 months, I believe that we will be in a much more stable scenario.
Okay, all right. With that, I've run out of time, but I thank all of our guests for joining us on the broadcast to take that very pertinent conversation forward. Viewers, we step into a very quick break.